expert authority world, have you ever thought about what to do with all the profits that you're making? Have you been thinking long term? It's one thing to have a successful company and have the profits, but what about wealth? What about your net wealth? What about long term? What about the future generations? I This is a topic that's near and dear to me, and it's why I'm excited to have Stephanie Walters, CEO of Urbe Wealth, on the show today. And she's going to be sharing with us the financial and investing secrets the wealthiest 1% use. And I got some questions I'm excited to ask her right after we thank our sponsor. Every business needs a book, including yours. Visit freebusinessbookpublishingcourse.com today to learn the 7 steps to publish and promote your nonfiction lead and profit-generating business book in 8 weeks. Once again, that's freebusinessbookpublishingcourse.com. Here she is, ladies and gentlemen, Stephanie Walters. Stephanie, how are you feeling today?
I'm doing great. Thank you so much.
I'm excited to have you on because a lot of people talk about business and success, marketing, sales, yada yada, profits, and I'm one of them because it's like all the time I'm talking about all these, but far and few in between people are thinking long term. And I shouldn't say that. There's a lot of people who think long term, but I think just as a society, people are talking about wealth, and net worth, and just long term investing less. Why do you think that is?
I think that people at this time are just they're scared of the unknown, and there just seems to be a lot of uncertainty right now in what's going on. I do get that from a lot of investors I work with. I try to target investors that are kind of new to the alternative investment space, and there's just a lot of caution, a lot of just like, what's it going to do if we have a crash? Just lots of questions and uncertainty about inflation and all of these things that a lot of us haven't seen.
So, how would you answer them if someone's saying, I don't know what to expect over the next 2 years, the next 5 years, whatever the case may be? How do you respond to that? And also, no matter what's going on in the world, because in my experience growing up, it seems like there's always something, regardless of what it is. It might be bigger, smaller, but, you know, I'm trying to think of the word here because it's like in 100 years there hasn't been anything like the pandemic, but at the same time, I'm thinking back to the economic S curves, and every 7 to 10 years things are shifting around. The recession
Mhm.
in 2008. It always seems like there's something going on. So how do you teach people to prepare for the future without knowing what it's going to be? I guess is what I'm asking.
Well, I mean, my background is in what I have people investing in are syndications, which are real estate. Largely for us, they're apartment complexes located in very good markets across the country. And if you look historically, syndications have been around forever, hundreds of years. But let's just look at the last few recessions and how they perform. I think that's a huge, great indicator to know that these particular asset classes do really well through recessions for lots of reasons. But yeah, I try to tell people to, just to go back again, like what you're saying. Historically, there have been recessions, and so look at what you're wanting to invest in and see how it's done. How it has done through, whatever turbulent period we're in. I think there's a lot of misinformation out there too, which, it's hard in this day and age to try to sort through what's true and what isn't. But I mean, COVID for multifamily, if you located those properties in the right markets, they've all done incredibly well. And I'm not sure that that's really a message that people would hear, listening listening to the regular news or,
Okay.
anything like that.
So tell us about the 1031 exchange. Why is that a good thing?
Oh, the 1031 exchange is, if you own a rental property or business, it allows you to sell that business or property and you can roll the money over tax deferred into a syndication. And but there are also lots of different tax solutions that the very wealthy use. And they really shouldn't be just reserved for the very wealthy. But like in our syndications, there's something that we use quite often, which is called cost segregation. And really, that is just, you speed along depreciation. So rather than take your depreciation over 28 or 39 years, we speed it up by getting these studies done up to 1, 5, and 7 years. So when you're buying a 10 or $20 million asset, those cost savings are very significant for the investors. But whether it's the 1031 or cost segregation, I think what I noticed from working with very wealthy investors is they are constantly aware of what their tax, with every investment of what they do, what the tax ramifications will be. And they're always planning ahead to reduce those as much as possible.
How far ahead generally?
Well, if they purchase into a syndication, they're wanting to know kind of the exit strategy. So if they're in the property from 3 to 5 years, they have it all usually planned out pretty well before they get into it.
What would you say to someone who has never gotten into real estate before? They're a little afraid of doing it, because with every successful industry, there's always those stories like, well, I used to do that, but, and then yada yada, whatever. They had a bad experience with it. Why do you firmly believe in it so much?
Well, I think you look historically, again, at who are the types of people that have invested in syndications. And largely, I really think since the beginning of the internet, before that, it was largely taken up by the very wealthy. Insurance companies and banks are people that really took up this space. And then I think as more information became more readily available on the internet, this is something that's become available to more and more people. But I was just listening to an economist today talk. It was really, really interesting. Actually, I learned quite a lot just about, inflation and what, they're predicting. And what he said is, one of the best places to be is in tangible assets. Now, those can be, and that's honestly what I see a lot of the wealthy being involved in. So that the number one tangible asset is real estate, investment real estate. But also, there's art, there's, just things, businesses, rather than, being in the stock market, which there really isn't a tangible asset that you have there. And the real estate, they said historically through inflations is one of the best places to be.
Now, I saw something on your one sheet when we were going through approvals to have people on the show, which really caught my attention. I want you to share with Expert Authority World here how you were able to retire at such a young age. And congratulations, because I see that you've done that recently.
Yeah, I don't know how you, not that young, but yeah, I actually retired. I just sold my agency in July of this year. I was an insurance agent before I did this. And I actually just got in syndications and raising money for syndications just a few in 2016 is when I started doing that. Before then, I had invested in, single family homes and things like that. But really, I had a long-term strategy, which is to hold on to these, houses until they were all paid off in 20 or 30 years, and then I could retire with the cash flow, hopefully, is what the idea was. So with syndications, I was able to, start raising money for some of these. And by doing that, I was working with a lot of wealthy investors. And I really noticed that they look at their money a lot differently than I did, or most people I know, and in the sense that they're using their money. They're not just accumulating it and letting it sit in a bank or a 401k or even an investment property. They're constantly letting their money work for them at all times. And by working for them, I'm saying cash flow. And once I really started focusing on that cash flow and, having that work for me, having my money work for me in different ways, then it didn't take long, for me to get to this point where I'm able to retire.
It's so inspiring because I think that's everyone's ultimate goal. And some people think of retirement as like sitting on the porch looking at the lawn. I don't see it that way. I see it more as, you have a point where you have more income than you need necessarily. That's not even it, because you can always use more to do good things with, I believe. But a lot of people think you need age to retire when really you just need the income. I think what I'm trying to say is when your income exceeds the expenses you have and you no longer are tied to it, that's really the goal. So congratulations on that again. And I think it's great that you're helping people, move forward down that road, to get there quicker. For someone who's listening and doesn't know, how would you describe a syndication?
A real estate syndication is just a fancy word for a group of people that buy a commercial property. And in our
A group
case,
of investors?
yep, a group of people. Now, those are split up into the management group, which in my case would be myself and my partner. And then once we look at hundreds and hundreds of deals before we find one that really makes sense for us to bring investors in and to close on it. So when we do all the due diligence, we run the numbers, we examine the market very thoroughly and know that this is going to work, then we go ahead and go out to our investor base and bring our investors in as passive investors. So the people are like, okay, passive, yeah. What does that mean exactly? Passive in this case is truly passive. You bring your money into the deal and you are paid a percentage of a preferred return as long as we hold the property. And in our cases, we're on our 8th deal together, and we routinely are returning our investors over 20% annualized returns. So so it's a different kind of structure, but essentially
What is the range of an investment for the syndication?
as